Hello guys, there's an opportunity to buy the Euro AUD pair, and I'm going to be doing a top-down analysis on this particular currency pair. So stick with me till the end and you'll be able to take advantage of this. So as is customary, I'm currently on the monthly chart, and on this chart we try to get our directional bias. So really looking at Euro AUD, if I'm to zoom in for us to see it properly, we can see that this market is generally trending upward. So if I'm to take this, it came down, and then we've just had the retracement. However, one thing of note is that the last upward swing was able to take out the most recent highest of the highs. So now we have a retracement, and we've had this retracement, and then it's presenting us with an opportunity to buy this pair again. Now, how do I mean? If we place a trend line here, we can see that it will help guide us that we've had several touches, or just pointing us in the upwards direction. So directionally, we can see that the market is trending upwards. Then if we zoom in even more, we can look at the candlestick that is currently dominating the market, and that's this bullish engulfing candle. So now we can see a retracement coming into the bullish engulfing candle since the start of the trading month in July. However, another thing is also worthy of notice that the Euro AUD is sitting currently on a very strong support level. Now, what do I mean? You can see, like I said, there's a monthly time frame. So that means every candlestick here took a whole month to form. That's about 20-21 days of trading to form. So this support level has in the past rejected price from going downwards. So you can see 1, 2. So for several months, so every candlestick here has been rejected from going downward. This makes it a very strong support level. And if we come here, you can also see that in the past it has acted as what? A strong resistance level. So that means the probability of price breaking this level and continuing downwards is quite minimal as compared to the probability of it continuing or pushing upwards. So this gives me more confidence that my directional bias is what? Bullish. So we've looked at three basic things. We looked at price being at the support level. We've looked at the overall market structure being bullish, and also the fact that the candlestick pattern that we have here is a bullish engulfing candle with price currently retracing into the what? The bullish engulfing candle. So having these three things in mind, then we can now go to the what? The weekly time frame. So basically on the weekly time frame, we try to confirm what we've seen on the monthly time frame, and then we also try to see if we can get like a candlestick chart pattern that we can build the rest of our analysis upon. So I'll come generally to this level and to see that there's really no clear-cut candlestick chart pattern that I can see other than the regular bullish candlestick structure, which is price giving you a high, a higher low, a higher high, and then we having what? A higher low. Now remember, in an uptrending market, the most important levels, like I always say, are the what? The higher lows, because we try to buy at prices as low as possible. So if we look at this pattern, price gave us a high, a higher low, a higher high, and price is currently giving us what? Trying to form what? A higher low, just as we picked out from what? The monthly time frame. That price is going upwards. Let's go to the candlestick pattern, and that price has given us a bullish engulfing candle, but that is currently what? A retracement into the what? The engulfing candle. So we come back to the monthly time frame. This is all what we can basically see for now. So let's just try to mark this out. This is what we can see for now, which I believe will be much clearer when we go to the what? The daily time frame. So voila. So now on the daily time frame, we can now see that price has been rejected from a major support area that we found from the monthly time frame, and the market has started making clear cut what higher high and higher lows, a higher high, higher low, a higher high. The market, like I said, is currently retracing. So now it wouldn't make sense to start trying to sell this particular um currency pair because, except if you are what a scalper, which I am not. So the best course of action would be to wait for this to come down, to start looking for what the presence of buyers that would take this what higher as price continues to target this level. This would be like our first point of call when we're looking at taking profit. So this is what price is currently doing on daily time frame. So let's see if we can add other tools which I use in my trading. Now, having seen this trend line that will go from the weekly time frame, another tool that I can quickly add would be my what Fibonacci retracement tool, where price move from the swing low to this swing high. And there's an area in this Fib tool that's very important, and that's the area between the 0.5 and 0.618 mark, or the 50% and 61.8% mark. So we try to map out this area, and most times this area, when well drawn, we will always see that it aligns with an existing support or resistance zone. So in this case, you can see that the area is aligning with what a support zone where price has been previously was rejected. So another thing that I want us to take note of is that you can see that price was coming into this area with a good or strong bearish momentum. Now, on getting into this area, we're already seeing signs of a reduction in selling power by way of this doji candle. So you can see, if I zoom in more, you can see that we have like a long leg doji candle in the by way of this red candle. So what this simply means is that the selling momentum is gradually reducing, and for us to start looking for our buying opportunities, we have to wait for the presence of buyers in this market as well as other entry criteria. So the question would now be, what do I do next? So like I said, buying opportunity is brewing here. So go to the 4-hour time frame, which is one of our entry time frames. So one of the major entry criterion I use, or entry style I use, is usually the counter trend line mechanism. A counter trend line is simply a trend line going in the opposite direction of the recognized trend of the market. So we've seen that the market is going upwards. Now we have a counter trend line. Now, what this trend line helps us to do is to make us see when the price of the currency has left this downward movement and has switched again to the what upward or bullish movement, and then we can now take our what buying opportunities. Remember, we're trying to buy this particular asset. The retracement is a downward movement. So like I said, it will be risky to keep selling because the market is at a key zone. It has been rejected from a support. The market is in an uptrend. What we are seeing now is what retracement. So we'll now have to patiently wait for price to stop doing this downward movement. And once there's a break of this trend line, we'll wait for a retracement to get a better buying price. Then we can take our what buying opportunity. So this is still the 4-hour time frame. You can see that the market is still giving us lower lows and lower highs. So we can go further down to the 1-hour time frame. So on the 1-hour time frame, you can still see that it's the same thing. So if you want to get an early entry, you can keep going down to the much lower time frame. Once there's a change of structure or a change in the market direction, then you can take it. But I would prefer for price to break this strong downward trend that we've gotten from the 4-hour time frame. So even if you are to take your entry on the 1-hour time frame, it will make sense to see price take this out. Once there's a retracement, then you can take your what buying opportunity that you can hold all the way here. So imagine if you're patient enough and you're able to get an entry around this level, your stop loss should be underneath the 61.8% mark, and then you can ride this all the way up. So you can see that you'll be getting a risk to reward of more than 4-1. So, and that would just be like a 33 pips stop loss. So, this is my outlook on the Euro AUD currency pair. If you're lucky enough to come across this video, you can compare this with your own analysis and monitor this as this trading week continues, as I believe this should play out excellently this week. This is Oba FX Trading Academy. If you're having challenges with your trading, you can always reach out to us as we are doing a massive 50% discount this month. We can teach you this strategy easily on one-to-one basis where we can address every personal questions and challenges that you'll be having in a month. We also have a Telegram community that we're trying to build. I just opened it for people to be able to make their own personal contributions. You can drop your trading analysis there also and get to discuss it with other members of the community. Enjoy the rest of your trading week and cheers.